The governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, has stressed the importance of economic diversification and reducing the country's reliance on foreign products and services, noting that this shift is key to stabilizing the nation's foreign exchange and ensuring effectiveness of the bank's monetary policy stance. Mr. Cardoso, who stated this at the press briefing for the 297th Monetary Policy Committee MPC meeting of the Central Bank of Nigeria CBN, announced the committee's decision to increase the monetary policy rates by 50 basis points from 26.75% to 27.25%. Other key outcomes from the meeting include raising the cash reserve ratio CRR by 500 basis points to 50% from 45% for deposit money banks and by 200 basis points to 16% from 14% for merchant banks, while the liquidity ratio remained the same at 30%. The asymmetric corridor around the MPR was also retained at plus 500 minus 100 basis points. Governor Cardoso explained the reason behind the unified decision of the Monetary Policy Committee.
The committee noted the moderation in headline inflation year on year in July and August 2024. In addition, the MPC noted the relative stability and convergence in the exchange rate across the various market segments, resulting from the bank's tight monetary policy stance. This is expected to improve confidence, which will enable economic agents to plan in the medium to long term.
The hike, the governor said, is intended to stabilize Nigeria's economy, which has been grappling with inflationary pressures worsened by government policies such as foreign exchange reforms.
Following a review of the upside risks to price development and the downward risk to the recovery of output growth, the committee opted to tighten policy further to safeguard the gains already accrued in moderating inflationary pressures.
The CBN governor stated that the bank's ongoing efforts have been geared towards curbing inflation, which had been on the increase, driven largely by energy and fuel price hikes and surging food prices, among other factors.
Food inflation eased to 37.52% in August 2024 compared with 39.53% in July, while core inflation rose marginally to 27.58% in August 2024 compared with 27.47% in July. Month-on-month headline inflation fell to 2.22% in August 2024 from 2.28% in the preceding month, while food inflation eased to 2.3% in August 2024 compared with 2.47% in July. Core inflation, however, rose marginally to 2.27% in August 2024 compared with 2.16% in July.
Governor Cardoso also said that the bank has realized tremendous progress in its efforts towards achieving economic development, which is reflected in the significant growth seen in the nation's foreign reserve, its gross domestic product, and other economic pointers.
Real GDP year on year grew by 3.19% in the second quarter of 2024 compared with 2.98% in the first quarter, driven by both the oil and non-oil sectors. On food inflation, the upside risks remained flooding, hike in energy prices, scarcity of PMS, and most importantly, security in farming communities. In addition, the MPC applauded the ongoing efforts of the federal government of Nigeria to bridge the supply deficit through duty-free import window for food commodities.
Mr. Cardoso, on behalf of the committee, gave assurance of continued, consistent, and proficient oversight and administration of monetary policy.
Members assessed the performance of key financial soundness indicators and noted with satisfaction that despite familiar headwinds, the banking industry remains safe, sound, and stable. The committee, however, emphasized the need to sustain supervisory oversight on the industry to strengthen its continued support to the economy.
The next Monetary Policy Committee meeting is expected to hold on the 25th and 26th of November 2024.